So hi Carl, I try to put something together for you to better explain why we have credit entries in the purchase ledger control account on certain situation, which is purchases on credit, but then we have debit entries in the same account when we are in a completely different situation, when we are in the cash book. So the main reason is basically because we are in two completely different situations. The first one is when we purchase something on credit. So in that case, the main entries will be we debit the purchases, we debit the VAT, and then we credit the purchase ledger control account. Because the purchase ledger control account acts as a control account, so it's there to make sure that everything is recorded properly. So this will be the opposite as what we have done in the other entries, so in the purchases or in the VAT. So if the purchases is debit, VAT is debit, purchase ledger control account will be a credit. The purchase ledger control account is also a credit because it's a liability. It basically means that we haven't paid this money to our supplier yet, but we will need to do this in the future, in a future date. Purchase ledger control account is basically the total of the balance that we owe to our suppliers. So let's say we have supplier A, supplier B, and supplier C, and the basically the amount of when we add up the amounts from supplier A, B, and C, we get a total, and that total is what will be it will be in the purchase ledger control account. Supplier A, B, and C, all of them, they will have their own account. So for supplier A, I will have an account that will show that this supplier we owe this supplier total amount of money. Supplier B will have another account which will show how much we owe to the supplier, and so on. So again, because we owe those money to the suppliers, the balance will be on the credit side. So for the cash book, we have a completely different situation. So we are no longer working on purchases on credit only, but we are in a situation where we actually receive or make payments. So cash book is divided in debits and credits. Debits record everything that goes in the cash book, so money coming in the cash book. So that's from sales, sales ledger control account, which are customers that buy on credit, or other income. The credits are all the money that is going out of the cash book, so the money that goes away that we need to spend so that we need to spend from our cash book. So when we make a purchase, we are paying from our cash book, we are paying from our bank, so we need to record this as a credit. Again, purchase ledger again, similarly, when we pay our suppliers on credit, we record this on the credit side of the cash book in the purchase ledger control account. So for the cash book, this will be a credit entry. So yeah, it will be a credit entry. So let's say we pay £100 to customer A, and we record this in the cash book. We will have like customer A, and we made a payment of £100. Now, because we need to make double entry bookkeeping so that we have accurate entries, we need to record this balance also in the purchase ledger control account. It's the same as when we have a purchase in the cash book, it will be on the credit side, but when we record it on the other side of the account, which will be purchases, of course this will be a debit because it's a purchase that we are making, so we have less money basically. So this this will be on the debit side. For the purchase ledger control account is basically the same. Customer A, we pay him £100, so money is going out of our cash book, but in the purchase ledger control account, that will be a debit. So you can see why basically there is a difference of the entries that we make in the purchase ledger control account. So to put this together, basically, we have this customer A. This is just a subsidiary ledger, so it's only the ledger of this particular customer A. But of course, if we add all the other customers like A, B, and C, then we have our purchase ledger control account, basically the totals. So in the first case, when we buy on credit, we kind of have this customer A, and we say that we owe him £100. So this will be on the credit side, is a liability that we owe him, and is basically the purchase that we make to from this customer. So this is how we record it, and this is the first situation. So the number one. When it comes to the second situation, so when we actually make the payment to this supplier, purchase ledger control account, will be in the second situation, and we said in this case, because this is money going out of the cash book, it goes at the credit side of the cash book, but it will be on the debit side of the purchase ledger control account. So in this case, it will be here, and it will be bank or cash, £100, and it will be recorded on the debit side, in this particular case of customer A. Again, it can be purchase ledger control account if we are considering all of the other suppliers. So this shows how this entry, because it was exactly the same amount that we owed to the supplier, has completed this account. So the account is now is equal on the debit and credit side. So it's basically we don't owe anything. It's kind of they cancel out, and we don't owe anything to the supplier anymore. So it's like completed. We can completely forget about him. The fact that we recorded the purchase on credit on the credit side as a purchase is basically a reminder for us as well that we need to pay off that liability, that this hasn't been finished yet. We still need to work on that, and in order to do that, we need to go to the second part, which is the cash book. And when finally we are paying this supplier, we record that in the purchase ledger control account, and then it will bring the balance to finally balance, so that we can forget about it. Well, I hope that clarifies it a little bit. I try to explain as best as I can, and hopefully, it's useful for you. Thanks.